Welcome, everyone. I am John Ryan. Welcome to Manny's Irish Pub Sports Betting Show and Financial Trading Strategy Show, too. We combined the two with Steve Merrill. He's been trading as long as I have, and combined, it's in excess of 50 years of experience here. So hopefully we'll provide you some wisdom from that 50 years plus of trading experience and give you some good Wall Street tips and maybe even a baseball pick if Steve or I are up to the task. Welcome to the show, Steve. How's your week been?
Doing well, John. It's official second half start of the baseball season. It's not really the midway point because they're about 90 games in, as you know. But second half starts here after the All-Star break. So looking forward to it.
I am too. I think the All-Star game was a really pleasant, positive karma type of event, and hopefully they can springboard that into a fantastic finish. Real quick, who do you? You're a baseball guru. Who do you like to win the divisions, or is there a team that really stands out that may not be a favorite that makes a big run and could be a World Series participant?
Yeah, it's a good question because during the slowdown here, the last 4 days of no games, a lot of wager talk TV about second half handicap and play against teams, big picture. And one thing I like to look at is the expected one-loss record, and that's based on run differential. And it's not necessarily an end-all be-all, but it can sometimes point towards teams that are a little overrated or underrated. And I think the central divisions in both leagues are very interesting because they're going to be one-bid playoff leagues most likely. In fact, you look at the AL Central right now, Cleveland Guardians are at 500. The Twins are one game below, and they're the only two teams that probably have a chance of winning that division and getting the playoff bid. The Twins are plus 27 net runs. Everyone else, including the Indian, minus. Even the Indians are minus 7. You go to the NL Central, which is just as bad. The only team that's plus run differential there is actually the Cubs. They're plus 26 runs, yet they're only 42 and 47. The Reds, who are 50 and 41 or negative 9. They should be a game below 500 based on that. So I think the two Centrals are wide open. It probably doesn't really matter because whoever wins that division probably won't go far in the postseason. But I think that's wide open for a lot of those teams to sneak into the playoffs.
Oh, I can't agree more. I heard rumor that the city of Boston wants to get a zip code change so that
exactly
is in Ohio so they can be part of that Central because they'd be in first place right now in the AL Central.
They'd be in first place by 2.5 games. And to put that in perspective, all five teams in that AL East are plus 20 net runs or better. In fact, the Yankees are the worst of the five. The Red Sox are below on by a game, but they're plus 27. Speaking of one team I want to talk about that division, the Orioles. They were the biggest money burner in all of baseball for about 2 years. And then the last 2 years, they've been the most profitable team in baseball. Right after that, dead last first. And everyone keeps waiting for them to regress. Didn't happen last year. They were actually sellers last year, despite being in the playoff race. And they're even stronger this year. So I would be very cautious to think that the Baltimore Orioles are just going to cool off because people have been saying that for a year and a half now, and it hasn't happened.
I can't agree more, and I will say this: historically, with the Reds, they won 12 in a row. I think it was actually more than that in 2012, and from that point on, they played 6 games over 500 and won the division. So it's not necessary for especially in that division, for the Reds to be 20 games over 500, which to make the wild card in the National League, you're probably gonna have to be 20 or 25 over. They just need to win the division and get involved. Now, I think they're a very dangerous team. I know if I was a member of the Dodgers and that pitching staff, I wouldn't want to be facing the Reds in the first round of the playoffs. That just spells trouble to me. But we'll have to wait and see. And lastly, Steve, before we get to the financial stuff, where does Ohtani go, or does he stay in Anaheim, in Los Angeles?
They were showing the payroll spend. I saw this stat the other night during the All-Star game, and it wouldn't surprise you or me. It's the same teams, but it's Yankees about spent everybody about almost double. But then the top 6 teams are both New York teams, both LA teams, Boston, and then maybe the Cubs, either Atlanta or Chicago. I think it's probably Chicago. The biggest cities, basically. That's how it's always been with baseball. So it's going to probably be one of those teams, right? Because they're the only ones that can afford them. And what's interesting is the Anaheim Angels are one of those top spending teams. So I would think there's a better chance than people realize for him to stay there. Otherwise, you figure he probably ends up maybe with the Yankees. I just don't know if they can swing that. I mean, they've spent like double everybody else. I don't understand. I never dig in much to the salary cap because as a handicapper, it doesn't affect how I handicap. That's all off-season stuff, But I don't fully understand it in the NBA or MLB. There's ways around it, and obviously in baseball, it's a joke because the same teams always outspin the bottom 10 teams combined. That's why I like to see a team like Pittsburgh or Kansas City or Oakland do well. They're all having Pittsburgh was having a decent season. They're faltering now, but Oakland and Kansas City are historically bad this year, and that's always been the knock on baseball. But to put in perspective how good he is, he leads the league right now in home runs, OPS, which is on base plus slugging, which I think is the best overall metric for offensive production, and wins above replacement. That's for hitting. Okay, so he's the best hitter in baseball right now. It's pretty obvious. But then you can make an argument he maybe is the best pitcher in baseball. Like I look at WHIP and ERA, he's like 3.3, but he's given up only 6 hits per 9 innings. The league has the lowest pitcher at any other starter. And you can make an argument, John. I know you're a baseball guy like me, a former coach. I mean, opponent's batting average is a pretty damn good stat to look at. So if you're going on that, he is the best pitcher and hitter in baseball right now, which is just insane.
Yeah, I think some guy named Babe Ruth was the last one to do it. I'm not
years
sure
ago.
statistically whether he was actually the best in both categories, but nevertheless, I think of poor Mike Trout with his $350 million contract, knowing that a guy on his team is probably going to make double that.
Well, that's the thing, John, is you wonder if they can afford both. I think that's why people assume he won't be in Anaheim anymore, and I don't know the logistics behind that. I know you saw Trout play in high school or Little League, I believe, and he only made, what was it, $500,000 the first year or two with the Angels because he cut in that under that rookie cap. I mean, he was a bargain. So it just shows it's an incredible story for both of them.
And he almost quit baseball because he was so homesick being on the West Coast. That's
New Jersey guy, right?
It's a story I'll never forget.
He was a Jersey guy, right?
Yeah. Played Tri-State Arsenal out of Voorhees, New Jersey, and the rest is history, I guess. Speaking of history, I think we're making all-time. We're going to close in on all-time highs here in this market, and like we've been saying, Steve, the Fed is tightening, but here's the S&P 500 futures. We're at 4560.5 right now, basis September, and we're that's above the recent highs and lows where you see those Fibonacci numbers, which are the red lines going across, and we'll explain what those are at a later date. But this market is very, very strong, in my opinion, and I don't see it backing off anytime soon. We might get overextended and have a correction maybe in 2024, but I think the rest of the year here, at least to October, is pretty smooth sailing, even if the Fed does tighten again and again. The 10-year has not made a new high in yield since the first tightening, and we've had 7 since. So how are you seeing this market?
Well, I still feel like big picture, some things aren't right with the economy. And we've talked about that, but you could also make that same argument back in, 2008, 2009 when it bottomed. And I didn't like how that played out. I didn't think they should save some banks and not save others. But in hindsight, it was the lesser of two evils because we'd probably go into a Great Depression otherwise. And it's the same thing like happened a few weeks ago, with Silicon Valley Bank or whatever. They didn't deserve to be bailed out. I mean, what they were doing was extremely irresponsible. But, what do? Do you penalize everybody else who's invested with their savings accounts and whatnot, and their retirement plans in the market and let it crash? So there is there's always been an upward bias in the stock market, and you're not going to get rich long-term shorting the stock market because it's growth and it's got an upward bias. With that said, though, you can have some nasty swings down of 50%, which we've seen happen 2 or 3 times in the last 3 decades. But when the trend is up like it is now, you're not really going to guess right when that fall is going to happen. So it's been a steady climb. And like you said, John, it's dependent on the Fed and rates. And it does look like they've kind of got things stabilized in that regard. And the rates have been going down too as well. I mean, the bonds have been, somewhat treading down with rates going up a little bit still, which is interesting. But yeah, it's a smooth, quiet storm and climb. And don't forget, normally it's sell in May and go away, right? So this is something we normally don't
words
see.
Right out of my mouth.
Yeah, in the summer. So that you got to, if that's the case, then things should be getting stronger. But you almost wonder, John, if it's like a head fake here. And now all of a sudden we're going to have the reversal of that. And don't forget, some of the worst, those one-day crashes, 1987, October, right? And
Yep.
I believe 1929 might have been October. I don't remember exactly. You can correct me on that. But
It was.
October is maybe the month we got to worry about historically.
Yeah, it is. It's had the biggest moves seasonally as a month, though. May is actually worse, believe it or not. and I guess maybe that's why you get to sell in May and go away.
Right.
But I think if you did that strategy and actually went away and didn't pay attention, you come back and see this thing at 4,600. The temptation to jump in and buy is going to be pretty great, which could, we could see a Labor Day rally, and then into October, as you said, and maybe that's when we get, a little slap in the face of reality. Some of the stocks are overvalued, but I mean, look at Apple. I always get a kick out of this, Steve, and this isn't politically motivated by any stretch of the imagination, but every single president that we've known in our lifetime, when job creation is strong, they somehow take credit for that. Like, I've created jobs and 10 million jobs. It doesn't matter that, well, gee, we're coming out of COVID where everybody was unemployed, or any credit at all to Microsoft, Apple, and the rest of them that are the ones that are actually creating the jobs. That always is a funny thing to me.
Well, first of all, I think the best saying ever, my father actually is the one that said it, but other people said it as well, is that the times make the president doesn't make the times. And I was a government major, so I've studied all this stuff pretty in depth.
I've never heard that. That's awesome.
Oh, you haven't heard that one?
So true.
Yeah, someone said it. I mean, my dad always repeated it's where I got it from, but it was someone definitely had said it. He didn't come up with it. I don't think. If he did, I need to trademark it. But
yeah, definitely. Like right
it's
after the
so
show.
true, though. Now, with that said, I do think certain presidents have done a better job than others, and I've always wanted to go look at the rankings, but you can't find honest rankings because everyone's partisan, right? And anybody who's going to put out a ranking today is either going to be a Republican or Democrat. They're going to slam one side, not slam the other. But I look at it within my era. You go back to the 70s a little bit more than I do, but we both remember the 70s, remember the 80s, obviously. Carter, I don't think, did a good job, but he also had a pretty tough hand, right? And it's like, and Reagan came in, and I do think Reagan did some things right. The one thing I agreed with Reagan was supply-side economics. He was less government, more market. And I do think that's an example of a president making a difference. And that's my opinion, obviously. But I think he came in at the right time. And he did come in with a pretty poor economy, from the 70s. So I do think they can make a difference. But yeah, nowadays, for the most part, it's the Fed. I think the Fed's the one that dictates everything. The president's kind of along for the ride, and they really can't control that beast anymore. I think Reagan back in the 80s probably could control it a little bit better, and that's where things kind of changed after that. But the Fed is basically the economy now, and they were way late to the party. That's why the inflation was astronomically bad a year ago, and they've somewhat solved it getting worse, but it's not. I was watching, they were talking yesterday on one of the shows about this, and if someone from the White House was taking credit for how inflation's been dropping. And it's such a joke because it's still extremely high over the last year. So the analogy I was thinking, John, as a sports guy, would be that's like saying we only lost by 15 because we were down by 30 in the third quarter, and we only lost by 15. That's exactly what they're saying right now. It's like,
I'll do you one better, and I predict this will happen in New York. Aaron Rodgers saying, yeah, we were losing by 30, and we only lost by 15. I had a career quarterback rating best.
Sure.
That's
taking responsibility for something that wasn't good and trying to make it a good thing by saying I had a good game or say, yeah, exactly right. That's exactly what they do. They say and that's actually what this guy did yesterday. He was talking about all the jobs created, like you just said, unemployment being a record low. One thing you don't ever see mentioned is how real earnings is not good for several years now, because when you factor in inflation, it's like, and this is actually the real example. They're making 5% more a year, but inflation was 7%. You're losing money in that case. You'd be better off neutral. So they pick and choose their statistics like you do in sports. It's the same thing in sports, right? You can pick and choose statistics. I can take ones that say Ohtani's the best pitcher ever, but his ERA is only 3.3, which is good, but not great. But, the league has the lowest batting average against him. So it's like, which one is it? It's always a little bit in between, probably. So one thing I'll point out about the market now versus 08, 09 is I use that analogy, but I don't necessarily agree with that analogy because the 10-year cyclical price to earnings ratio, the Shiller PE ratio, whatever you want to call it, it bottomed out pretty good around 2009. It bottomed out around 15 or so, I believe. It's at 31.5 as of today. And the average is like 20-something. So technically, this market is still more expensive than average, which is another reason I'm not a big believer in this bullish run long term.
Yeah, I agree. And I think the wild card is that short interest is monstrously high, meaning that if this keeps going higher, those shorts are going to have to cover, which can fuel this to very overvalued levels, but that's where it's going to be going if they have to start covering. What I have here, real quick, Steve, I know you have to get over to the Wager Talk MLB show, which is an awesome show, especially when that Tony Finn guy is on it too. I don't know if he's appearing today, but Angel Hernandez is his favorite umpire, I'm sure. But back to the point here, this is crude oil, and what we have here is you'll see a gray arrow pointing down right here on today, and we got bearish news out of the world. What is it called? The World Petroleum Institute that monitors supply and demand, and that production is actually going down as opposed to expectations were up. So I think crude oil here is going to go down. What that pattern is, and I'm just going to name it, and then we can give an educational lecture later on how it is called that. But it's one black crow is the candlestick pattern we have in place today. There's also 2 and 3 black crows, and the only thing with the black is that that's bearish because it's filled. If it was bullish, it would be open, and then it would be I forget what it's actually called. I think it's just called a crow. But this is a pretty highly bearish day for crude oil. It's down nearly $2 a barrel. I think heating oil will probably be a little bit more resilient than unleaded gas, but we're pretty close to the end of the supply for vacation, Steve. The gas has to be delivered to the retailers before the vacations start, but we're kind of like near the end of it. So I wouldn't be surprised if this goes down more, and then that helps the inflation front and probably fuels prices a little bit higher even.
And if you look at, to just draw a simple trend line from the very top down to the very bottom where we are, it's a pretty straight trend line down from those tops. Yep. And it's almost touching it right now once again. And it's bounced lower every single time. I mean, every one of those tops, there's 5 or 6 of them. You can almost connect every one of those with a very steady downward sloping trend line. So first of all, the trend is definitely down over the last year or so. So you're not looking for a reason to fight that. And it's almost touched it and it's reversed again. So the question is, how much farther does it go? You could get a little bit of a 50% retracement probably over the last few weeks. But yeah, look, we all knew oil was going to come down because once again, that's a manipulated market. I mean, the Saudis control the supply and demand, and oil is a great thing to trade for that reason. We're going to look back in history, John, and be like, it actually briefly went negative back in 2020 due to all the chaos.
That's right.
In March on the front month. And it's just like negative interest rates. They were zero for so long, and they were negative over in Europe. Then we actually started thinking that could happen. But a 2-year-old or a second grader maybe with a damn econ book should know that rates should never go negative. And then within like 3 months, they go from 0 to 3 now to 6% mortgage rates. It's just insane. You look back on stuff, and sometimes you get lost the forest from the trees, right? And when oil's at 100 and something, like it was in 08 also, another analogy to 08, 09, came down dramatically during that recession, and it was going to come down again here. I think it's probably kind of in a sideways. It's like Bitcoin, it exploded, exploded back down, and Bitcoin's basically been in a 20 to 30 range now for like a year, and I think oil is going to be the same way. And we haven't talked Bitcoin in a while, but I was thinking about this the other day. I mean, Bitcoin is kind of stabilized. I think a lot of the meme traders, whatever you want to call them, are kind of out of that market now. And this is just, that's why I always thought 20,000 was the base, and I think it always will be. So if you want to invest in Bitcoin right now, I doubt it ever goes below 20 again. I think that's that long-term holding base, because that's where it broke out from 2 years ago was 20 when it went up to 70, 60 or 70. Came right down, and support and resistance works, as you know. You and I both use support and resistance levels, and they work for a reason.
Yeah, there's no question it works. You just have to, be disciplined with it and not force anything. Just like forcing a bet in sports betting just to have the action, and that's a sure recipe to lose money on both fronts.
John, look at that gap way back to all those red downs on the middle to right side of the chart. See that gap? And you look at the near highs here recently. Yeah, that gap right there. Look at it's touched that gap like 2 or 3 times now. I mean, that's exactly what we're talking about with support and resistance. And you could probably explain it a little better than me, but the reason that works is because when you get a gap down and all those red drops there from months ago, that's just sellers. Nobody wanted to buy that. The sellers was just overwhelming. So now when it gets back up, there's a lot of people that sold at that level, so they could probably cash out again and break even, I guess would be a good way to put it, and it's people. I fall victim to that even as well. It really mathematically should make no difference, but breaking even, especially when you've been losing, feels like a win. It's just a mental thing. And I've always said that's why support and resistance works. It's that buy and selling pressure that I know you like to look at as well.
Yeah, just like betting sentiment in the sports betting
Right.
markets. You get everybody betting on one team, and guys like you and I that have been around this thing a long time, we start looking at the other team, even if it is the Oakland A's. But before I let you go here for your Wager Talk Major League Baseball show, do you have any final thoughts or a trade that you may have done this week or a stock you're looking at to buy or short?
Yeah, I've got like 2, 3 more minutes. So do me a favor, pull up natural gas if you have it. This is one I want to get your opinion on. Like I said, I think oil's probably kind of in a sideways range, right? I think the bonds are probably in a sideways range. I think, that's something we've seen when things explode one way or the other. But natural gas is very interesting to me because obviously it peaked very high and then it just plummeted the last year or so, just like bonds, with the rates going up, bonds dropped as well. But you can see clearly here for several months now, it's in a very low sideways range. So, and it keeps trying to, if you go back, to that initial little spike up, the little green spike there, about a quarter to the left there, right there. You see when it hit that bottom, when it hit its bottom there a few months ago, over to the right more, go to the very far, that bottom there, and see how it made a nice rally up with the green, and it's never really broken above that. It's almost bottomed out 2 or 3 more times. I think it actually bottomed out one more time, slightly below that other level. But I think that's a long-term bottom. I mean, look at the 2, 3, 4 times it's tested it. So, I mean, you could take a long-term approach right now and probably just buy and have that as your stop down there. But if it gets anywhere near that again, that's a great risk-reward trade, in my opinion. Or if it breaks out here, which I think it'll probably do before it ever gets down to that bottom again. Even one of those recent bars, if it breaks above those, you can see it's starting to trend up a little bit.
Yep.
I just like in the sports and whether it's the market, I just like risk reward ratios, right? And I just feel like natural gas has bottomed and it might not do anything for several years. It hasn't done anything for several months and it might just be in a sideways channel. But with the war in Ukraine, I find it interesting, and a whole natural gas pipeline was exploded. They said Russia blew up their own gas line. I think it's turned out the U.S. did it. And none of this has moved still. It's like if that doesn't spike it, what's going to, but I just don't see it going much lower. So this might be one of those dead markets for the next 3 years. It might not make you money one way or the other, but I was just curious your opinion on it. It's something that I'm kind of keeping an eye
Well,
on.
it's where I have the line now at 229, which isn't that far away from the 249 right now. It looks like we're right in the middle of the range between $2 and $3.
Yeah.
And the low is 194. Back in April. And what I did was I expanded this off of the. This is the lateral consolidation you were mentioning between 2 and 3, with the most recent high a year ago at 10. There's no chance, not realistic to think that this is even going to go above 5 or 6. But I think you get another retest here at 230, you nibble a little bit, and you start building a position between there and the $2 range. And I can't imagine the economics of natural gas being that bad that it sustains a downward move through 2.
Well, that's the thing. Exactly, John. And that's the other point. I guess that's a great point to bring up because it's not a stock. It can't, I mean, there again, oil went negative for like briefly. That was more of a technical thing, with just chaos and
it was expiration.
That was a rolling over contract, delivery type thing. So you could look at UNG, I guess, which is the ETF for natural gas. It's more forward contracts, but yeah, but the point is, natural gas can't go to zero, right? If it is, you and I would become millionaires because we buy all the natural gas in the world because we need natural gas. It's used for many things, and so the question becomes like, what is the real bottom for natural gas? Where like you're just making money holding it at that point, and I can't imagine either it gets below 2. And something else to keep in mind, I know there's a war on oil, there's a war on all the fossil fuels or whatnot, but natural gas is actually, in my opinion, one of the cleaner fossil fuels. I don't know if it's technically a fossil fuel, one of the natural resources, so I've always saw natural gas and nuclear, obviously, I wish you kind of trade nuclear futures. That'd be explosive, but no pun intended. They're both actually, I think, very good options going forward. And natural gas has always kind of been underrated in my regard. So yeah, I mean, I haven't done enough research to know the real.
Huh? What happened?
How long is that chart right there that you've got on? What's that
Goes
high?
back to August 1st
It's
of
almost a
last
year.
year. So
It's
that's
almost a year,
one.
right?
Yeah, that's a full year that you're looking at.
And my theory too is when you have a monster move down like that from August basically to like what was it, December or January, November, that dropped down to the right, and then it's in a consolidation. My theory, and I haven't researched enough to back it, but I'd love to get your take too. I almost feel like the consolidation period often matches the length of the trend period as well. And
Yeah.
it almost looks like that's what's happening here. It's like 5 months down, now 5 months sideways, right?
Yep. And usually bases are formed like this.
Right.
So again, I think you want to be a better buyer than seller with natural gas if that's of interest to the listeners, for sure.
Yeah, I'd say it's like handicapping, right? It's a filter. It's one of the many factors we use. If you're looking for a reason to buy natural gas, I would say there's some good support reasons right now. Whereas if you're looking to sell it, I'd be a little careful. I think the risk reward on buying it is better than the risk reward selling right now. I guess the best way to put it.
Yep, definitely. And you can always use options too, to make it a little bit less risk adverse. But that's for another show, I think, Steve.
Yeah, there's a lot of option stuff I want to talk with you next week on. It's some good stuff. We haven't done that in a while.
Yeah, for sure. Even start with the basic bear spreads, bull spreads, and then again, I mentioned Tony Finn because I told him that I sent an email to the Washington football team to change their mascot to the Iron Condor.
That would be a
And
great
they didn't
nickname.
listen to me, obviously. But the Iron Condor is a rather sophisticated option strategy. But we'll get to it someday.
Had a hedge fund bought the Commanders, they were for sale. They bought them from like a hedge fund bought them from Snyder. That would have been a great nickname to change it to. It would have been like free marketing.
It's an intimidating name. Iron Condor sounds like
Iron
it's
Condor is awesome. Yeah, that's actually a great nickname, John. All seriousness, and of course, I was
Yeah,
a Redskin fan growing up, so I hate the name Commanders. I hated the name football team, but I could have gotten behind Iron Condor.
absolutely. Well, before you go, tell everybody where you can, where everybody can find you. Any big bets that you have going tonight or the weekend. Anything else you want to say is fine.
Yeah, it's been a great baseball season, and I've actually got two MLB best bets tonight on Friday at wagertalk.com. And then, as you mentioned, in a few minutes here, about 10 minutes or so, I'll be jumping on the MLB TV show at Wager Talk TV on YouTube. So check out Wager Talk TV on YouTube and hit subscribe and the bell for instant alerts like you do here for Predictive Playbook, because when videos go live and shows go live, you get the updates. And John, 20 days away from the NFL preseason. I didn't realize that until Ralph Michaels told me today on the show. We've done Wager Talk today. We're less than 3 weeks away from the start of NFL football, which is pretty
I
crazy.
positively can't wait.
Amazing.
Go Jaguars.
Yeah, I mean, the NFL's wide open, and that's why fading the public. If you like the markets, if you like to fade sentiment, check out my NFL Fade the Public video on Wager Talk TV, wagertalk.com.
That's one of the best shows on the planet, everybody. And if you are into the NFL and sports betting, even DFS information, you can.
Yeah, exactly.
extract from the
Contests,
show.
anything else you might be doing, right? Office
Yep.
pools. I mean, you don't have to be a daily bettor to benefit from the consensus info. And basically what I do is, as John knows, is I tell you who the most public sides are, the most publicly bet sides. And I've got a formula I use from looking at sportsbook data, contest data. I love to look at some of that. It's even non-betting data I look at. And it's not just simple one site. It's 20, 30 sites I'm looking at. I have kind of a feel, a little bit of a subjective approach over the years, but it's done well. And fading the public has made money consistently for a few years now in the NFL.
And it's done quite well, to say the least. And I've used that information for the circuit contest, for example.
Correct.
So it's very useful and a great show. So till next Friday, Steve, have a great weekend and have fun on that Major League Baseball show. I'll be tuning in. I'll check out the chat room for a little bit at least. And thanks everyone for watching. Make sure you subscribe, ring the bell, do the same for the other shows that we appear on. Be greatly appreciated. And until then, remember the two things. You don't bet over your head or trade over your head. And may all the wins be yours. Thanks for watching.